Welcome back. You're watching us here on Halftime Report. Greenlam Industries reported a tepid set of fourth quarter numbers. We are now joined by Saurabh Mittal, who's the MD and CEO of the company, joining in. Saurabh, it was expected that way, largely because, one, the environment wasn't fairly conducive. Secondly, margins were compressed, and the net profit obviously was buoyed down by other expenses, higher depreciation, higher finance costs on account of your, particle board plant that came on stream during this quarter as well. The question is FY26. As you stand right now at the start of this year, what are your targets for this year when it comes to revenues and margins across all your verticals?
So for FY26, we should be looking at 18 to 20% of top line growth. And laminates obviously is our core business. So we expect growth coming across all our verticals: laminates, veneers and allied, plywood, and particle boards. So all the businesses should do well in FY26. Particle boards, our sense is, we probably will still have some EBITDA losses in FY26. Plywood, we should have reduced EBITDA losses. Even in FY25, sales have doubled over FY24, and EBITDA losses have come out. And laminates, we expect improvements in margins. And veneers and allied categories also, we expect improvements in margins.
18 to 28% growth is something that you started out FY25 with as well, right, and eventually ended up doing 11.4%. So what gives you the confidence this time around that it is a little more achievable than what it was the last year?
So you're right. FY25, we started out with 18-20% top line growth, and we ended up with about 11.3, 11.4%. So clearly in the second half of FY25, growth did slow down. I think in H1, we were running pretty okay. And also the particle board factory got delayed by a few months. That also added to the initial guidance or expectation revenue growth, and which didn't materialize at a later point. So as far as this year is concerned, all our factories are up and running. The chipboard factory has started in Andhra Pradesh. At least we are free from the manufacturing side. The entire focus will be on building sales and building revenues for the business. In FY25, we also opened several international subsidiaries. We expanded our warehouse in certain European markets. So I think last year, despite the challenges, even at 11.4%, 11.3% growth, I think we've done well versus the market. We've grown the business. We've nearly maintained gross margins. We have had some reduction in EBITDA margins. We've maintained price points. We've maintained working capital discipline. Our debtors periods have been under control. Our working capital days have come down. So just I think with the efforts we've taken last year on building markets, building products, having the factories up and running, we seem confident to be able to achieve 18-20% growth in FY26. That's how it looks right now. Yeah, but our effort has been to maintain that growth over several years.
Okay, all right. Saurabh, you did mention for your plywoods business, your losses would be lesser. That's
right.
And for your particle boards business, the pressure is probably going to still continue. Right. So can you just give us a sense in terms of the EBIT? What will we see in terms of losses for both of these businesses separately?
Right. So I can't give an exact number, but clearly plywood in FY25, we doubled sales. And we expect good growth coming in FY26 also. And EBITDA losses should come down. Particle boards, break-even comes at nearly 50% utilization. And our sense as of now is that we may not be able to achieve 50% utilization in FY26, although the first 2 months, things are going in a good direction in the month of April and May. So I can't give an exact number because it depends on how things pan out in the year. Where do raw material costs, end up with. But clearly, the volumes and the business will grow, but EBITDA losses will be there. That's our sense in particle boards.
And on veneers, you did about 5.4% in the previous quarter. The fourth quarter, that came down to about 3.8%. Right. You've said that steady state volumes or margins in this business could be around 10 to 12%.
Right.
By when do you reach there?
So, our endeavor is to do that the earliest. So last year, clearly the EBITDA losses, came down across verticals. The door business grew last year. The flooring was growing very well in first half of the year. Second half of the year, it kind of slowed down. So obviously, we're not losing any money anymore in that business. So there is complete attempt towards building the business to that 10-12% EBITDA margin levels.
Okay. You do have debt which is fluctuating between around 950 odd to 1,000 odd crores.
That's right.
Give us a sense in terms of where that would probably be by the end of next fiscal.
So our sense is on the debt side, we probably will be in a similar band, maybe a bit lower than what it is right now, because we still have certain capexes to be completed of the new plants. And with the expanded revenue, we might have some working capital investment also coming in, assuming we grow 18-20%. So our sense is it'll be plus minus maybe 50 crores, 75 crores. So maybe slightly on the lower side, obviously, more minus than plus. Yeah.
All right. And what about working capital days? You've managed to, improve that to about 55 in the end of this year, by the end of this year.
Right.
Is there any more room here, or do you think this about 45 to 55 days is what is a normalized level for you now?
So it depends on where our volumes, kind of reach out. Our sense is the more we sell, the better we collect, because the debtor period is about 22 odd days. And as we expand, as we kind of settle our new businesses, there could be some more improvement. But my sense is this year, we may not see much improvement coming on the working capital cycle. I think we'll be able to hopefully maintain, the 55 odd days, maybe a few days here and there. So I think it'll take some more time for us to really give you a clear picture on where the working capital days can be. But our attempt always has been, to run a very disciplined working capital model with controlled inventory, control outstanding.
Is any further capex on your mind right now? Because FY25 was close to 2,500 crores. I suppose even if you do 20%, the next year you get to about 3,000 crores. You said that peak revenue potential for the company is 4,000 crores. So maybe by FY28, you will be running out of capacity. Have you planned for that?
So on the revenue side, with the investments we've already done, we can achieve about 4,000, 4,200 kind of revenues in the business. On the capex for FY26, we'll just be completing the open capex we have in Andhra Pradesh and Tamil Nadu, and some routine capex we'll be needing, in FY26. As we move ahead to FY27, 28, we've said that in the past we have opportunities to do multiple brownfield expansions in our Gujarat and Andhra Pradesh factory as far as laminates is concerned. For chipboard, I think we have 2-3 years of capacity available till we reach a certain utilization level. For veneers, etc., also we don't need more capacities the next 2 to 3 years. So really, I think as we see things now, for FY26, our plans are more or less clear. Moving ahead, as far as laminates is concerned, we can do brownfield. For other categories, you are aware that we have got a large piece of land in Uttar Pradesh. So that probably, at some point, we'll think of on when we can start to work there, but not in FY26.
Take that point. Thank you so much for joining in, Saurabh. Wish you good luck for FY26, and hopefully you do get to that 18 to 20% revenue growth as you've guided for the start of this year. Unfortunately, you couldn't last year itself. But with that, we'll simply do a short break. As we do that, here's some good news for our viewers. The India business news leader, which is CNBC-TV18, is now just a click away. It is on the new app, the CNBC-TV18 all-new app, which gives you instant access to breaking news, in-depth articles, and financial world updates, all of them at your fingertips. You can download the CNBC-TV18 app from either the Apple Store or the Google Play Store, or just scan the QR code, which is up for you on the screen.